Karl, happy Friday. I hear you. At the same time, I worry about, I remember when bond investors were caught offsides when the Fed started hiking so fast, and everybody was surprised, like, oh, where did this come from? Couldn't the same thing happen in equities here?
It's possible. Hey, John, thanks for having me on today. Certainly, as previous guests have mentioned, Nvidia's amazing quarter and guidance showed improving margins, strong demand, backlog, stocks up over 60% year to date. And Bob just commented that, market performance, although concentrated in some of the tech names responsible for over half of the year-to-date returns, there is some broadening out, though, which is certainly helpful in terms of healthcare and financials are up over 7% so far. So there may be some worry, but I think the focus needs to be on what is the company's, like you said, competitive edge, and is it sustainable? And certainly, Nvidia had a wonderful print yesterday, and it's all the talk of the town.
Talk more about healthcare and financials, because normally 7% would be, wow, eye-popping, kind of in a regular year for equities, but up against what we're seeing happening in tech with Nvidia driven by AI, it looks small. So talking to Medtronic earlier this week, I believe it was, they reported earnings, their diabetes business turning around, some of that GLP-1 anxiety from last summer easing off. What's the potential, particularly in healthcare?
No, certainly. When you mentioned Medtronic, I think a lot of the medical device makers, particularly coming out of the pandemic, where the voluntary and elective procedures were at a decline because, certainly you couldn't get in to see anyone. When you've had more of a rebound in that area, all of a sudden you needed to get supply and demand more back in line, and you're starting to see some better things from healthcare moving forward, and you should see that in device, and we certainly see it on the pharma side as well.
Can we finally stop worrying about the health of the consumer? We just had the Live Nation CEO on last hour talking about just how strong the appetite for concerts and going out continues to be. It's not just about Taylor Swift and Beyonce. It's about a lot more than that. But at the same time, prices remain stubbornly high, and there's a concern out there about how long this continues. Should we stop worrying?
I don't know if we should stop warning. I think it's always a concern. You mentioned the Fed just a bit ago. When we first started the year, I think the thought was that the Fed's potential dot plot of only cutting 3 times might be a little too conservative, and they might cut out about 6 times to get us below 4%. I think now there is the belief that given the inflation prints, like you said, costs aren't coming down maybe as quickly as thought a couple of months ago, kind of staying between 3 and 4%. And the consumer's been very resilient. And I think the Fed is less likely to try to cut until maybe you start seeing a little more weakness. I think they're fine with the pause where they are until they see some data saying otherwise.
Okay, you like Alphabet, Pepsi, and Nextera. We had a guest just a few minutes ago making the case for Alphabet, so I want to leave that one out. Tell me about Pepsi and Nextera.
No, absolutely. So as far as Pepsi goes, again, a non-tech name, soda and snack foods, you mentioned the consumer, very resilient. Pepsi's basically trading at a market multiple. It's a less cyclical business. And it's actually growing faster overseas now. It's over 40% of sales. So certainly for investors focusing on the long term and maybe not trying to catch a trend, we certainly still like snack foods and soda.
Okay, and Nextera?
On Nextera, so this is maybe a name people haven't heard of as much. It's one of the largest power producers around, and that's kind of concentrated in the Florida area. A third of their revenues are renewable resources. And the sell-off has provided a very attractive valuation for investors to get in. And also right now, they're trading at around a 3.6% dividend yield, and they've committed to raising that 10% a year over the next couple of years. So we kind of like that as a utility, but also a play in the future.
All right. Some interesting ideas. Karl, thank you.